Hello students, welcome to Accounting 2302 Managerial Accounting. This is Dr. Mercado with you today, and in this lecture we are going to be covering problem 23-1A. Chapter 23 deals with evaluating variances from standard cost. Very important to please ensure to read the chapter before you begin working on your assignment. Also, as you are working each of your homework problems, please make sure that as you work that problem, you locate the section from your ebook that applies to it, you reread it, review any examples provided, formulas given, so you can have a better understanding of the content. Okay, now this is the problem that we're going to be covering. The problem is direct materials and direct labor variance analysis. So we have Jericho Fixture Company manufactures faucets in a small manufacturing facility. The faucets are made from brass. Manufacturing has 45 employees. Each employee presently provides 38 hours of labor per week. Information about the production week is as follows. Okay, so we have standard information and we have actual information. Standard information is basically what we anticipate. That is what we budget that we're going to be spending either in materials or labor. And then we have the actual. When things actually happen, we actually go through the manufacturing process. We know exactly what we spent. Those are our actual figures. And then we compare our standard, which is our budgeted numbers, with our actual numbers and see how we came about. Are we over or are we under our budgeted figures? Okay, so the standard number of pounds of brass to be used per faucet is 0.4 pounds. Okay, the standard price per pound of brass is 80 cents. Okay, so we spend 80 cents per pound, and each faucet uses 0.4 pounds of brass for production. Okay, the standard wage per hour for the employees is $21 an hour. The standard labor time per faucet is 15 minutes. So it takes us about 15 minutes to manufacture one faucet. The actual price per pound of brass is 90 cents. The actual pounds of brass used during the specific week is 4,500 pounds. The number of faucets produced during the week is 10,000 faucets. The actual wage per hour is $22 per hour, and the actual hours for the week, that's the 45 employees times the 38 hours, is 1,710. Okay. Now, using all of that information provided, we have to A, determine the standard cost per unit for direct materials and direct labor. B, the direct materials price variance, the direct materials quantity variance, and the total direct materials cost variance. And letter C, the direct labor rate variance, the direct labor time variance, and the total direct labor cost variance. Okay, so all of that information is going to be covered in this one problem. And I'm going to go section by section. We are dealing with direct materials and direct labor variances. Okay, the total direct materials and direct labor variances are separated into direct materials costs and direct labor cost variance for analysis and control purposes. Now, if we look at Exhibit 5, we've got the different types of variances. We have one dealing with materials and one dealing with labor. To get the total direct materials cost variance, we are going to have to get the direct materials price variance that we calculate plus the direct materials quantity variance to give us the total direct materials cost variance. To calculate the total direct labor cost variance, we're going to get the direct labor rate variance plus our direct labor time variance. The sum of those two will give you your total direct labor cost variance. Now, we've got all of the formulas here, and I will go through that once we get to that part of the problem. Now let's tackle the first part of the problem, which is very simple. They're asking us to determine the standard cost per unit for direct materials and direct labor. How much are we anticipating or budgeting that we're going to spend in materials and labor to manufacture one faucet? Okay, so let us begin with calculating direct materials. Okay. Direct materials. Okay, so for direct materials, okay, the problem says that the standard price per pound is 80 cents. So we spend 80 cents per pound of brass, and each faucet uses 0.4 pounds of brass. So if we multiply the cost times the actual quantity of brass that we need to manufacture each faucet. We're going to get 80 cents times 0.4. That's going to give me 32 cents in material. Okay. So every faucet is going to use 32 cents of brass to be able to manufacture the faucet. Okay, that's the materials. Now we're going to do direct labor. Now for the labor, we estimate that we're going to pay our employees $21 an hour. Remember, we are calculating standard. Standard is our estimate. So we are estimating we're going to pay $21 an hour, okay, per employee. And then we're going to multiply. Let me go ahead and put this like this. Okay, $21. And then I'm going to multiply that. According to the problem, it takes us about 15 minutes to manufacture one faucet. So I'm going to get the 15 minutes and I'm going to divide that. Let me insert the divide sign. Okay. And I'm going to divide that by 60 minutes. So it takes me a quarter of an hour to manufacture one faucet. Okay. So let's go ahead and let's get our calculators. So first I'm going to divide the 15 minutes divided by the 60 minutes. So it takes me 0.25 of an hour to manufacture one faucet. And we are anticipating paying our employees $21 an hour. So that means that it's going to cost me $5.25 in labor to manufacture one faucet. Okay. So now I can add the total of my direct materials and my direct labor. Add those two together. That gives you $5.57. That is my standard materials and labor cost per faucet. That is how much we are anticipating spending in materials and labor to produce one brass faucet. Okay, that is requirement A. Okay, let me save that. Okay. Now requirement B is a little bit more complicated. There's 3 requirements to it. We have to calculate the direct materials price variance, the direct materials quantity variance, and the total direct material cost variance. So let's go back to our summary that I got from the book. Okay, so the direct materials price variance, the formula is as follows. We're going to get the actual price minus the standard price times the actual quantity. I've copied that formula over here. Actual price minus standard price times the actual quantity. So the formula is given to you in the book. Now the next section is important. Okay, if the actual price per unit exceeds the standard price per unit, the variance is unfavorable. So that means that my pricing for my materials came in higher than what I anticipated or budgeted. If you get a positive number, that is an unfavorable variance, and that means that you spend more than what you anticipated. Now, if the actual price per unit is less than the standard price per unit, then that's a favorable variance. If you get a negative number, that means you've got favorable variance, which means that you spent less, your costs were less than what you anticipated. Okay, so let's do the direct materials price variance first. I've got my formula here. So basically, we're just going to apply the data. So the actual price of my direct materials, okay, what is my actual price for my materials? If we look at the data, it says that the actual price per pound of brass is 90 cents. Okay, so it's 90 cents per pound. And let me put this in parentheses. And then I'm going to subtract the standard price. According to the problem, my standard price per pound is 80 cents. So we anticipated spending 80 cents per pound, and we ended spending 90 cents per pound. So, and I'm going to multiply that by the actual quantity of brass used. How much brass did we use? According to the problem, we used 4,500 pounds of brass. So we're going to multiply it by 4,500 pounds. Okay. So let's get our calculators. 90 cents is what we spent. We're going to subtract what we budgeted for. We had budgeted or set our standard at 80 cents. So we are paying 10 cents more than what we anticipated. We're going to multiply that by the total actual quantity of brass used. We use 4,500 pounds. So that gives me a